the vast and dynamic world of Forex trading, understanding technical analysis is crucial for making informed decisions and maximizing profits. One powerful tool in a trader's arsenal is the symmetrical triangle pattern. This pattern is a reliable indicator of potential price movements and can be a game changer for those who know how to leverage it effectively. A symmetrical triangle is a continuation pattern formed by two converging trend lines. These trend lines create a triangular shape, with the price oscillating between them. The converging nature of the lines signifies a period of indecision in the market, as buyers and sellers are in a temporary equilibrium. This phase is usually followed by a breakout, indicating a potential strong move in either direction. Before we get any further into the video, for a better understanding of what is being done, let's take a further look at how we can identify symmetrical triangles and how to trade them. First, we are going to look at different attributes that makes up said price action pattern and topic, starting off with number 1, trend lines. Draw trend lines connecting the series of lower highs and higher lows. The lines should converge, creating a symmetrical triangle pattern. The drawing is not perfect, but you get the idea. Luckily for us, TradingView already has a built-in drawing tool which makes things a whole lot easier for us. Number 2. Volume analysis. Pay attention to the volume during the formation of the triangle. Typically, volume decreases as the pattern develops, indicating decreasing market activity and a potential upcoming breakout. We will go more in detail later on this, so be sure to continue watching. Number 3. Duration. Symmetrical triangles can form over various time frames, from short-term intraday patterns to longer-term patterns spanning weeks or months. It is also worth noting that the bigger the respective time frame the pattern is forming on, the longer it would take to break out. Now we will look into how to properly trade symmetrical triangle. Step 1. Wait for the breakout. Patience is key when trading symmetrical triangles. Wait for a decisive breakout, where the price closes convincingly above or below one of the trend lines. Step 2. Wait for confirmation. To reduce false signals, look for confirmation of the breakout. This could involve waiting for a candlestick close above or below the trend line, or waiting for a certain percentage penetration of the trend line, but generally speaking, it's always best to wait on a retest of the broken trend line. A retest of the trend line is when price retraces to the broken trend line, then continue in the respective direction. Step 3. Volume confirmation. A breakout accompanied by a surge in volume adds credibility to the move. Higher volume suggests stronger market conviction in the direction of the breakout. Step 4. Measuring targets. Use the height of the triangle to estimate the potential price target after the breakout. Add or subtract this height from the breakout point to project the potential price move. Step 5. Risk management. Set stop-loss orders to manage risks. Consider placing them just outside the opposite side of the triangle from the breakout point. Step 6. Multiple time frames. Confirm the breakout by checking multiple time frames. A breakout on a higher time frame adds more weight to the signal. Now that we understand what symmetrical triangles are and how to trade them in theory, allow me to show you how it's done in practice. As mentioned earlier, the price can go in either direction after forming a symmetrical triangle. The video I'm about to show you is how you can decipher which direction has the higher probability of price going. But before we go any further, please be sure to like this video and hit the subscribe button to show your appreciation for the excruciating amount of time and effort invested in the making of this video, packed with valuable information that would usually comes at a high cost. But at RAS FX, we are delivering this kind of value for free. We even have our 30 chapters long Forex trading course scheduled to be released very soon. Prove your dedication to becoming a profitable trader by subscribing for more valuable content that will elevate your knowledge and sharpen your trading skills. Now that's out of the way, let's continue with the video, shall we? First, connect the highs and the lows of the symmetrical triangle with the converging trend lines. To avoid confusion, it's better to use a different color from the candlesticks. After doing so, what you want to look for is a reduction in volume in the form of price failing to touch either trend line. meaning that if the price shows that it had difficulties at least once touching the upper trend line, while having no issue touching the lower trend line, it's an indication that the buyers are losing control of the market, and the price could ultimately break out to the downside. On the other hand, if the price fails repeatedly to touch the lower trend line, with lots of volume pushing to the upper trend line, it's an indication that there are fewer sellers in the market, and the price could inevitably break the upper trend line, causing an uptrend. To better understand this, you must know how to draw a trend line properly. If you don't, then I highly recommend you hit that subscribe button, as we do intend on making future content on how to do so. After analyzing the 4-hour time frame, let's take a look at the daily time. As you can see here, there are 3 massive candles to the downside, indicating that there is more volume to the downside than there is to the up. To further cement this theory, notice that after 2 weeks, the price still has yet to gain enough volume to push back to the upside from where it initially fell. In Forex trading, it's little details like these tell the most about what's happening in the market. And if you know what's currently happening in the market, then you have a better chance of predicting whether the price is going up or down afterward. Now we go down to the lower time frame to look for our entry zones. We can either enter at the break of the trend line, or you can play it safe and wait for a retest of the broken structure. The latter is safer and highly recommended. However, a retest is not always given, and as such, you could miss out on big trades, like this setup, for example. In conclusion, trading symmetrical triangles in Forex requires a combination of technical analysis skills, patience, and risk management. While these patterns can be powerful tools for predicting price movements, it's essential to remember that no strategy guarantees success in the unpredictable world of trading. As with any trading approach, continuous learning, adaptability, and discipline are key to becoming a successful Forex trader. If you found this video helpful and want to learn more about mastering the Forex market, be sure to hit that subscribe button to join our community of aspiring traders. We release lots of valuable content like this, so don't miss out on any of it. Thank you for watching.